After the Federal Reserve cut interest rates by 50 basis points in the September meeting, it was very odd to see bond yields rise, and now the 10-year bond yield's above 4%. This shows that investors and market participants might not necessarily agree with the Fed in terms of how much interest rate cuts will go, considering how strong the economy is. On Friday, we had a blockbuster jobs and unemployment report number coming in at 254,000 jobs for September and upward revisions for the two prior months. This shows that this economy is a lot stronger than expected, possibly in like a roaring 20s scenario. And why would we need that amount of rate cuts for that? There's definitely an argument for that, at least with the data as of today. But the Federal Reserve also has a responsibility to be proactive in case they see further weakness. It's hard to be in Jerome Powell's shoes right now. It's a very tough decision to make, but I think it might be best if the Federal Reserve goes on a case-by-case basis for interest rate cuts and maybe doing it by 25 point increments instead of by 50 basis point increments. That's just my opinion. We have tons of economic data this week. We have NVIDIA's AI event today. We have FOMC minutes, Fed minutes from the September meeting. It'll be interesting for that to see the debate between why we need a 50 basis point cut to start and what Fed officials think about going forward, whether or not we should do in 50 basis point increments or 25. So I'll be curious to see some of the conversation there. We have CPI inflation on Thursday, and we have PPI inflation on Friday. We also have AMD is having their AI event, and we have Tesla's robotaxi event, which is going to be huge. There's a lot of, for Tesla's robotaxi event, this is going to be big for Tesla in the sense we want to see the next leg of their growth story. How many models of cars will they reveal? And if they reveal a cheaper sub 25,000 car, we want to see when the production of that will start. Right now, where it's expected late 2025. Let's see if that happens. I think it'll be light on specifics. I think it'll be more big picture and vision. But let's see how that goes. There's a lot of emphasis and interest on that. But between Tesla's robotaxi event, AMD and NVIDIA's AI events, and then the CPI and PPI inflation, this week's going to be huge for the markets. We have Goldman Sachs just up there, S&P 500 price target for year end from 5,600 to 6,000. And then 12 months from now, they have their target from 6,000 to 6,300, mostly due to margin expansion and also due to how strong and persevered this economy really is. It's persevering despite high interest rates. So look, I agree. The economy is very strong. I think this is like a 1995 moment where the Federal Reserve is cutting interest rates into a very strong economic backdrop with good tech and innovation. So I'm not surprised Goldman Sachs and David Kostin up their S&P 500 targets. We had Ed Yardeni do that. And a few other people have done that. Pretty much, Ed Yardeni is pretty much saying this is like a roaring 20 scenario. You're going to hear a lot of analogies with, what's going on right now to either the 90s internet boom or the roaring 20s. And I do kind of agree with those analogies. I think there'll be a good next few years, maybe 3 to 5 years of a run. But obviously it'll end in like a bust around 2029, 2030. But until then, this market has a lot going for it, especially with AI. And then we also have China trying to stimulate their economy and do everything they can. And in order to prevent a bigger problem 12 months from now, they have to unleash even more debt creation and quantitative easing, which will be good for, in addition to stocks, also good for gold and Bitcoin. And we're starting to see Bitcoin run up after a sideways summer for the last few months, pretty much trading between the 47,000 to 70,000 range. Bitcoin is finally getting a little bit of momentum and is about 63,500 to 64,000 right now. So let's see if that continues. I think it will, especially with more global liquidity in the market, especially with China stimulating and interest rate cuts around the world. But let's see that. The only downside is we might not have central banks cut interest rates as much as originally expected if global growth is so is so strong. But we'll have to see. But either way, we have a lot of events coming up this week. We have to stay tuned to see what happens.